Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Tom Shaughnessy on the line. He is the author of SecretCaps. Tom, how you faring this earnings season?
Yeah, not bad, Joe. How about yourself?
Doing okay. Some good ones and some bad ones, but it's not over yet. First of all, you've got a product on MarketFi now, and you got a special deal for subscribers. Tell us about it.
Yeah, so we're just a little recap on ourselves. We focus on intensive research on microcap companies. It takes several weeks or months to find a solid company. And then we build a report around it after, several rounds of research, interviewing the CEOs and management teams. And, we don't come by these reports often, so, we put a lot of work into the ones that we do have. And we're currently running a deal. It's $1 to join, and I'm actually giving away pairs of free sunglasses just in time for the summer.
Okay.
Love it.
All right. So, tell us about your investing style here a little bit. What do you look for? You a fundamental guy? Talk to us about your investing style.
Yeah, sure. I can actually give you an example. One of our recent companies we profiled back in December, Nuvo, they were a technology company, and they were actually undergoing a transition. They lost what they called their app bar business, if I remember correctly. And they had, 20 to 30 million in revenue, and basically this went down to nothing. They lost the whole business because web browsers changed the way that they included the app bar. And, this was hidden, the restructuring was hidden in these numbers, and management actually turned the business completely around, but you couldn't see that from the year-over-year numbers. You had to dig into it a little bit. And the company went from, around $1 a share north of $3 recently, and we got out up about 150%. We're happy with it, and it's just one of the ideas. It takes several months for these ideas to play out, these microcap ideas, but once they do, you only really need one good idea a year.
What made you get out? Just profit target? This is what you were looking at on the chart? What made you get out?
It's a tricky one. I mean, there's nothing wrong with taking profits, that, but once it got to around $2.50 from our entry at $1.28, a lot of the trading groups on Twitter we saw were getting in on it. Projections were getting a little out of control. There was a great Zacks report out after ours and after our CEO interview, which we put on our site, and the report was fantastic. But after that, it attracted a ton of attention, and projections started getting a bit out of control. And it's since we sold at $2.96. It's since come down to around $2.40. The management team's great. It's a great company, but once it gets out of control, you got to get out.
Okay, all right. Let's talk about some other issues that you're either active in or looking to get active in.
Yeah, sure. Another company I'm actually pretty active in is we focus on tech. One of them is called Direct Insight. We initiated coverage around 60 cents. It's up to around 80, and they're a smaller company. They're a $10 million company, but they're extremely clean, no debt, $3 million in cash equivalents, $6.5 million trailing 12 months revenue, and they actually, really the interesting thing here is when we first profiled the company, they offer a solution, a receivable solution. So they automate a lot of the solutions for banks and their customers to reduce their days sales outstanding, things like that. And one of the risks was, can they sign a bank, and can the bank then offer this product to its customers? And
what's the symbol again on this one, Tom?
Sure, it's DIRI.
Okay. I'm sorry. Go ahead.
The main question was, can a bank offer, this product to their customers, and will they even sign a bank? When we first did our report, they didn't have any of this. They had IBM, legacy customers, but this is a new offer in Paybox. So we wanted to know, if they could do it, and they actually signed a bank, a Tier 1 global bank. We're not sure who it is, and they didn't say, but they have a customer through that bank too, so that removed a lot of the risk. So the story here is just signing additional banks and bringing additional customers on through that bank, but it's an innovative little company, $10 million, and it's interesting. It's clean, Joel, and it's highly scalable. A few banks and a few customers that think it obviously take off.
Okay, definitely having some problem here bringing the chart up on it, but could you just give us a price target you have for it?
Yeah, sure. Let me open up my report real quick. I'm looking at $2-3, Joel. Over the next year. But
Okay.
I actually have a bear scenario with 5%, 10% upside as well. But Joel, it's not. This isn't like a straight line type growth company that you'd see with Inuvo or Research Solutions or other microcaps. That a lot of the thesis is pinged to them signing additional banks or customers. So it's either going to be great or if they can't do it, they can't. But we think they can. They've won a few awards at BAI. They won their payments track innovation. They signed a global bank first of all, and the customer seems happy with that. They haven't left because they'd have to 8K it, I guess. And just waiting to see what happens with it.
Okay. What else? What else are you looking at today? Or
another company we're looking at is Research Solutions, RSSS.
Okay.
That's one we profiled a few months ago. They're a little tech stacks. Software as a service company as well, and they have an offering called Article Galaxy, kind of like Westlaw. What Westlaw does for law, they do for scientific, technical, and medical information. And it's a highly scalable, high margin offering because it's online. It's called Article Galaxy, and they've transitioned to this, product from their print business. And this is more of a straight line growth scenario. They had 2 quarters of growth with Article Galaxy, double-digit growth, and we thought that was an inflection point. So they report in about 2 weeks, and we're looking for them to continue that trend.
Okay. Do you kind of use your strategy in reverse and short microcaps that they're not looking so good to you, or are you just a buyer?
I've honestly never done it, Joel. It's actually really it's kind of hard to do it, honestly. I mean, it's hard enough to buy them. I mean, like looking at Direct Insight, if you really wanted to buy the company, in blocks, you'd more than move the shares. I mean, that's a double-edged sword, though. I mean, if great news comes out, the company executes, and management does well, which we think they will, and investors start buying it, then it works to our advantage as shares get hard to buy and the price moves up faster.
How did you become interested in microcaps?
Started on Seeking Alpha a few years ago, and just there's one little company called Vironet we profile. It was also a technology company out in Israel, actually, and they white labeled their solutions for companies, and they ended up getting bought out. And we just thought it was interesting to I love finding companies before anyone knows about them and researching them, and there's no rush, Joel. You're never late to the game really because you missed a tweet or a trade. You're in it, and then once Twitter and the markets find out about it, then they can go crazy about it, and you're already invested. It doesn't matter at that point.
Okay. And do you ever look at any bigger stocks at all, or do you just stick with the SecretCaps, MicroCaps?
Yeah, we follow bigger companies. I mean, most of our recent, in-depth research has been on these smaller ones, but we do follow on our past research, and we give credit to other people who research these. But we point our members their way. But we're working on Radcom and Supercom, which are both bigger companies. And I believe that's it in our portfolio as for big companies. I mean, they're not too big; they're still small, but. Let me check real quick. And then we have Marathon Patent Group. That's another
What's the
larger
symbol
company.
on that one?
Marathon?
Yeah.
Marathon's MARA and Radcom's RDCM.
Okay. All right. Boy, this one's looking kind of quiet here at the $6 level. Are you more of a breakout trader, or are you just picking it up because on all this consolidation?
We actually picked it up on all the consolidation. We added again under. I got to check exactly. I think it was around 550 we added a few weeks ago. That it just got pummeled on some weird news that people didn't really understand, and we bought it back. It's more of an IP play. That's an in-depth type scenario. But Radcom just reported yesterday.
What's RGCM? RGCM? Is that what you said?
Yeah, RDCM.
Okay. You definitely throwing some symbols at me. I haven't. Okay, yeah, that one spiked down yesterday, huh?
I know. I wish I could just type it in for you. It's hard to tell.
Okay, this one got a little bit spanked yesterday. Here, you looking for it to recover?
Yeah, the story's still intact. We're hoping for 10, maybe 15 cents in GAAP EPS. They had 5 cents. I believe they had 5 cents versus 1 cent year over year, and that was great. But 82% margins. Revenue was up 16%. Gross margin 82% is insane. That's pretty hard to do. And their GAAP income was at 430 grand. So that was great. The company's moving forward. I think that next quarter they could recover from this R&D spend, and they'll actually bolster their next quarter earnings.
Okay. What do you think of this overall market here? S&P futures hit new highs earlier in the week, kind of topsy-turvy. They don't like the GDP data from today. What's your thoughts on the overall market?
I was listening to your last guest. I think it's time to buy Microsoft.
Oh, no. Okay. Sold to you. No, go ahead.
Yeah, I don't watch the market too much, Joel, because a lot of these microcaps aren't even affected by it because there's really no institutions in them. But, it's crazy out there. I saw the Twitter leak yesterday. That was it's ironic that a leak in financial information would come from the company that helps us all get our information faster.
That's what
right?
I said.
Yeah.
Thank you. Thank you for bringing that point up. Tom agrees with me.
Yeah, no, it is ironic. Let's. Would you ever invest in a stock like Twitter? Outside of your SecretCaps portfolio, is this something?
Honestly, no, Joel. I'm concentrated. I only invest in what I do my research in, and I of course I'd invest on someone else's research if it's solid. I do it all the time, but I like to make a difference in my investment. If I'm going to put 3 weeks of work into a company and then spend months finding it and researching it, I want to invest so it'll make a difference once it plays out.
Okay. Any other final tips for our investors, or you want to talk a little bit more about your product?
No, it's fine. I mean, people can find my product, get their free sunglasses and sign up and try it out. And hope to have some of your viewers on there.
Okay. All right. We've been on the line with Tom Shaughnessy. He's the author of SecretCaps. You can check out his product on MarketFi. Thank you, Tom. Have a great day. We'll talk to you again soon.
Thanks, Joel. Thanks, Brian. I appreciate it.
Thanks, Tom.